The US dollar is a little change to start the new trading week and the new trading day in the North American session. I'll talk about the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective, outlining the bias, what I think the bias is, what I think the risks are, what I think the targets are for your roadmap for trading today. So let's get started. I'm going to start by taking a look at the euro versus US dollar, and here I'm focused on the hourly chart for this currency pair. And what you can see here is somewhat similar to a head and shoulders formation. There's a shoulder right here, a head right there, there's another shoulder right there. We're trying to break through this neckline here, which if I were to draw something, it would be from neckline to neckline. But and at the same time, trying to break below the 100-day moving average. The problem is that on the downside, we have this low of this yellow area called swing area. Why? Because the market swung from this low to this high, from this low to this high, and then back down to this low to this high, and this low to this high, and then fell below this area right here and used this level as a swing level instead to the downside here. As you can see right here and here and here, and then we move back above and we try to use this level as a support once again. In trading last week, again, each of these dashed lines represent a day of trading. So last week we were below that level and then above it, and now we're above it again, and we're trying to hold that hold this area right through here between 1.16449 and 1.16596. So although the price is down from the high, we are testing this key support level, giving the buyers an opportunity to buy low and hopefully sell high. And that what they need to do in that case is get up on the next target, and the next target would be the high of this swing area. And then we'll look toward this other swing area right through here, where we had both support and resistance in this area in the short term. As you can see, the number of times that happened, and get above that level would open the door for further upside momentum. Now, also at this level is a 38.2% retracement, another technical tool that I like to look at, and that's at this move to the downside, longer term trend to the downside, and then break above the 38.2 in trading last week. The problem with last week's trade is that the high price right here stretched up to the 50% retracement level. That 50% retracement level was similar to this area right down here, with the big support here, big resistance up here. So you can characterize this as big support, this is in the middle of this range, and this is big resistance up here. And so that's how we're starting the week. That's how I'd look at the euro versus US dollar. If we do break below this 1.16449 level, then we obviously look for the 200-hour moving average. It's a green line in this chart. Get below that level, and things are looking more toward the another test of the lows that we saw last week and the week before. Those formed a double bottom down here near the 1.15413 level. You can see that right through there. Let's take a look at the dollar versus yen next, and I'm going to focus on the 4-hour chart. And trading last week, the price fell below the 100-bar moving average on the 4-hour chart. You can see the momentum off of that break. That momentum took the price below these highs right through here, which were the highs going back to in the month of end of September. So that was a more bearish move to the downside. But what we didn't do was get down to test this swing area through here, where we either had where we had lots of resistance right here. We broke above the resistance and then broke back below it, and then broke back above it through here. So we couldn't get below that level. We couldn't get below the 61.8% retracement level of this move to the upside as well. And so we started to see the rotation to the downside. And since and in the process, we moved back above the 100-bar moving average. As you can see, the low price in trading here today did find support against that level at 150.239. That is now support. As long as the price can remain above that level, the buyers are in play, and they can push the price higher. That move to the upside would then need to get above the broken 38.2% retracement of this move to the upside once again at 150.713. We were above it earlier today in the early Asian session, but could not sustain that momentum. And then we start to look toward this level right through here, which is at the 1.50991 level. Again, we broke through that level earlier today, but could not sustain that momentum, and then use that level as resistance right here before moving to the downside. So there is some history in today's trading where that level is going to be a resistance level. We need to get above that level to increase the bullish bias for the dollar versus yen traders. what I do like is holding the 100 bar moving average on the downside once again, and that keeps the buyers in play for this pair. Finally, let's take a look at the sterling versus US dollar on the hourly chart. And trading last week, we did move higher in this pair, breaking above moving averages in the process and above this swing area, this yellow area right through here. And trading on Friday, we came down to test the low of that swing area, similar to what we saw in the euro. I'm trading here today, testing the low of a swing area, moving back to the upside. In this case, we did break back above the 38.2% retracement. And trading here today, should have gone higher, couldn't, start to rotate back to the downside. So we are seeing a desire to move lower. The problem is this swing area continues to get in the way, and now we've added the rising 100-hour moving average at 1.33946. That's a level to get to and through as well. So for you as a trader, you can lean against this area right through here. If the price bounces off that level, that's good for you. If the price moves below that level, that's not good for you, especially given the support down here and with the rising 100-hour moving average now in the play. So get below that level, then we look toward the 200-hour moving average, and if we get below that, that opens the door for further downside momentum. Conversely, if we do hold this area right through here, and so far we're trying to, we do need to stay above the 38.2% retracement. If we're able to do that, then we start to look toward the high price that we saw in the trade last week, and more importantly, the 50% retracement and the 100-day moving average. Both of those levels are converged right here at 1.34865, and that's, needless to say, going to be a key level not only today but going forward into the new trading week. So there you have it, a look at three of the major currency pairs from a technical perspective with my view of what the market, the bias, and also the key levels in play. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.